Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Pulse for Friday, September 3rd, 2021, the last trading day before the Labor Day weekend. It may be a quiet week here in the beginning of September, but the markets and the economy have a lot going on, a lot we're going to discuss here today very quickly, starting with the markets. The markets are a little bit mixed on the day, but pretty flat. Looking at a very muted week of action. Dow Jones, if the market closes where it is right now, will be dead flat on the week. The S&P up 0.5%. The Nasdaq leading the way, showing a gain of 1.5% on the week. The big news of the day, the big news of the week really, was the labor report this morning. The August jobs report detailing progress, in the labor markets. Expectations were for adding 720,000 jobs in the month of August, and we missed those expectations by a wide margin, adding 235,000 jobs. So job growth, but not nearly at the trend level that we were looking for. And, we think this is very important aside from the labor market effects, but as we've been talking about for a while with the Federal Reserve and their unsurety about where they're going to go with monetary policy, a lot of speculation that they were going to start to be more restrictive, raise interest rates, remove stimulus. We have not felt that way. You've heard us say for quite some time that that was not going to be the case this year in 2021. And we think that this further puts them into a corner where they're going to have to hold off for the time being. When you think about the Federal Reserve, they have two stated mandates. Okay, these are their mandates. One is to control inflation, which I don't know that that's really being effectively done at this time, but that's for another day to discuss. The second is they say they want to see, in their words, substantial further progress in the labor markets before they think about raising interest rates. Now, missing a jobs report by this wide margin, certainly as vague as that statement is, substantial further progress, I wouldn't call this substantial further progress, so I think that likely takes any changes off of monetary policy, changes off the table for 2021. The markets will like this. Growth assets, long duration assets, stocks will like this news. So we think it's important there where the Fed is going to have to be patient for longer and allow this market to continue to run on its current trajectory. Let's take a look real quick. Investor sentiment. We talked about how negative investor sentiment has been, even as this market continues to move higher. Reading today at 53. We'll put that up on the screen for you to see. 53, which is still a neutral reading. So we have moved up off of the fear levels of last week. But folks, this is a market that has made 55 new all-time highs this year, and I don't think you would expect to see such neutral to leaning negative sentiment with a market that has performed so well. So still, as a contrarian thinker and investor, we do like to see sentiment continues to stay down. We don't want to see people feeling too greedy or too overconfident. And the last thing we'll touch on today is seasonality. I think it's pretty well known at this point. You've heard us talk about it. You probably hear it in the financial news. August and September tend to be the two worst months seasonally for market performance. But what's important to note, and this is another chart we'll share with you on the screen, while the next 25 to 30 days in the market tend to be very flat, if anything, it's the period that follows that that's actually the strongest period of the year. So the final 3 months of the year tend to show outsized gains compared to the rest of the year. And just a little history, when we're already up double digits going into those final 3 months, which if markets stay where they're at right now into October, we will be there. The performance is positive about 91% of the time for that period of time. So that's all we have today to wrap things up. It's sad to say we had a little bit of weak labor numbers heading into Labor Day weekend, but it'll remain to be seen if this trend is something that maybe is a short-term effect from concerns about variants and the Delta variants and these other ones that we're starting to learn of now, or is this something that is cause for concern in the labor markets? If you have any questions, reach out to us. We hope you have a great Labor Day weekend. Markets will be closed on Monday in observance of Labor Day, so we'll see you back on Tuesday for the Heritage Market Minute.